A lot of us are expecting a Robinhood IPO in 2021, but will it happen? Today I'll take a look at what we know so far and why this looks to be the year Robinhood goes public. Welcome to the Healthy, Wealthy, and Wise channel, where we focus a lot on IPOs. In fact, in December we had a preview of 7 companies that we expected to come out in early 2021, and as of right now, 3 of them went public last week, and 2 more are set to go public in February. And that's not to mention that every week we have our featured IPO This Week episode, where we talk about all the companies that we know are going public for the upcoming 7 days. It's really just a great way to stay up to date on all the IPOs coming out. Now today, we'll be focusing exclusively on Robinhood, a company that has been rumored to go public for the last couple of years, but now, based on a lot of factors and reports, an IPO seems more imminent than ever before, and I'll share some of those reasons with you. Now for many of you, you've been with me for a while, and as always, I want to thank you for sticking with me. And for those of you here for the first time, my name is Kevin, and if you're into staying on top of all the companies hitting the market, this channel might just be what you're looking for. So definitely consider subscribing and turning on the notification bell. That way you won't miss any videos as soon as they come out. Now keep in mind that the information in this video is meant to be informative, and any opinions I share are completely my own, and therefore this video should not be viewed as providing financial advice. You should always do your own research or consult with your own financial advisor when making any investment decision. So today I wanted to share some information on a company that a lot of people in the community have asked about going public, and that of course is Robinhood. And it makes sense because a lot of you use the platform yourselves, like it, and of course a lot of people just like the idea of investing in a company that they use and find value in. But they also see the company as one that has a lot of growth ahead of it, fueled by a younger demographic leading the charge, particularly millennials. The company has made CNBC's disruptor list multiple times, and with good reason. They've helped revolutionize online trading by not charging commissions, which has led to many other brokerages to follow suit. Impressively, with their over 13 million accounts, Robinhood has muscled their way in less than a decade to make household names like Charles Schwab, Fidelity, and Vanguard completely adapt to their commission-free pricing model. While a Robinhood IPO would not likely be one of the biggest money deals for a possible 2021 offering, it could be one of the most sought-after ones. At this time, there are a lot of unknowns about an offering, but there are definitely a few things out there that have been reported that lead to a likely IPO of Robinhood stock happening this year. Let's first talk valuation and how the hot market environment has powered it up. As the company benefited big time from the pandemic, adding about 3 million accounts in just the first quarter of last year alone, Robinhood looked to capitalize on the boon to their business by holding some fundraising rounds last year. Over the summer, David French and Reuters reported that the company had raised $660 million to win the most recent round, which raised the company's valuation to $11.7 billion as of September, up from a valuation of $8.6 billion from another round of fundraising just a couple of months earlier. And in that same article, it was estimated that Robinhood raised a total of $1.25 billion in 2020 alone. With business good from a booming stock market and investors eagerly coming on board in the private markets, for those reasons alone, the timing for a sooner than later Robinhood IPO makes total sense. And piggybacking on top of that, we've also had Reuters publish another article in December reporting that Robinhood has settled on Goldman Sachs to lead its preparations for a 2021 IPO. Although that was qualified by a common statement of a Robinhood IPO date being subject to market conditions, so no definitive timetable was given other than saying that the expectation was for it to happen this year. Also in that report, sources reported that the value of the company at the IPO could be around $20 billion, which would be almost double to where it's currently valued. As they say, strike while the iron is hot. And speaking of strike, how about striking that like button if you're enjoying this video? It's super important in letting me know that you want to hear more about a Robinhood IPO, plus it really helps the channel with YouTube when it comes to pushing the video out to more people. And that's equally important because the more we can grow the community with your help, the more time I can commit to putting out the content you want to see. So really appreciate your help in making this channel successful. Alright, let's get back to Robinhood. So before I talk about another report why Robinhood stock should be publicly available in 2021, which also happens to be the most recent one, I think it's important to talk about some of the headwinds against the move, or things that have likely slowed them down. Now Robinhood has had its share of issues in the past, including things like their outages last March, a botched attempt to launch new checking and savings products in 2019 that brought in regulators, data breaches in the past year, and the negative PR of a young trader killing himself last summer due to a lack of clarity of his actual account balance. But today, I just want to mention the more recent ones that may have impacted an upcoming Robinhood IPO. A couple of the big ones were summarized nicely in an article by Ave Salzman on Barron's in December. The first issue was the Secretary of Massachusetts suing the company with accusations of it violating the state's fiduciary rule, which says that brokers owe a duty of loyalty to their customers. The complaint said Robinhood enticed inexperienced investors to make risky trades so it could profit off of trade execution. These claims against Robinhood aren't new, but the formal lawsuit in place saying that the company doesn't care about its users isn't optimal to have to deal with when preparing to go public. Robinhood has denied the allegations and said it planned to vigorously defend itself. While the charges could be hard to prove, as mentioned in the article, what could be problematic from a legal sense are claims that Robinhood ignored its own options approval rules. Not following your own rules or policies is always a target for regulators. The company responded that it has since, quote, made significant improvements to our options offering, adding safeguards and enhanced educational materials, end quote. So that's one headwind. The other one in the article was news on Robinhood settling SEC claims that it had misled customers about how it makes money. Reportedly, and I'm reading this directly from the article, the SEC said that from 2015 to 2018, Robinhood was more focused on getting large payments from market makers than on getting good trade execution. So much so that the poor prices its clients got sometimes completely outweigh the benefits they received from free commissions. As typical in settlements, Robinhood didn't admit to or deny any wrongdoing, but did pay $65 million to settle the case. Now the issue here is the basis of how they were able to disrupt the market and offer trades commission-free in the first place and still make money. What Robinhood does is pay for order flow, which is a legal practice that involves taking a cut of the profits market makers earn by executing Robinhood client trades. According to Salzman, other brokers also make money this way, but tend to rely on it for much less of their revenue. At Robinhood, it makes up the majority of revenue, up to as much as 80% of it, while as a comparison, at Charles Schwab, that number is 2%. While paying out $65 million can't be really seen as a positive, what is that the SEC issue is no longer hanging over them, so they can put it in the past and move forward with their IPO. Now, one other interesting piece of information from this article, particularly when you want to start getting an idea of where the company should be valued at, is that while Robinhood doesn't disclose revenue or profits, security filings indicate that the company made less than $1 billion in revenue last year and may fall short of that number this year. As quoted from the Barron's article, when asked earlier this year if the company is profitable, the chief financial officer said that Robinhood was investing heavily in our company, so our costs are going up quite a bit, along with our revenues as we grow. Now, public perception aside, the bigger consideration going forward is how can Robinhood grow revenue beyond order flow? Whether the process gets more regulatory scrutiny or not, the company needs to diversify in other ways to make money where they don't alienate their customers that have come to them primarily for the low costs by starting to charge fees. My guess is instead of doing that, they will look at adding more features or personalized consulting services going forward. Since many of their account holders are new to investing, coming in after the market crash in March and have yet to significantly deal with dropping prices, these kinds of services could prove popular once a significant correction occurs. Right now, many new investors are feeling pretty good about themselves because things have been great overall in the market for the past 10 months, but that will be tested when that correction comes. And it will, you just never know when. I can tell you I felt the same way in the late 90s, but after the bubble burst, many people got out of the market after taking big losses and didn't come back. While I was lucky not to take any big losses myself, the experience definitely made me more cautious and gun-shy on pulling the trigger on individual stocks. What Robinhood can't afford to happen is to have a significant portion of their core demographic leave when the next downturn happens. And premium support services might be the answer, helping the company generate additional revenue and keeping their account holders on the platform. Alright, so let's get to another piece of evidence that there will be a Robinhood IPO this year. And this is the most recent one as of this recording. Now, I want to preface this evidence by saying if you've watched me on some of my live streams, I've said that of all companies, I believe Robinhood is the one that should go public by direct listing. I mean, here's a company that was founded to basically give a middle finger to the established players in the industry. And it has the name Robinhood of all things, a character known for robbing from the rich to give and help the poor. If Robinhood were to go public with a traditional IPO, we could expect to see the same story play out that happened with Snowflake and Airbnb. The big institutional investors on Wall Street will buy all the IPO shares at one price and then the next day be able to sell them to ordinary people for more than double the price they paid for their shares of Robinhood stock. How un-Robinhood-like would that be? Now, the issue until recently was that with direct listings, A company couldn't raise new capital, and that's something that Robinhood was obviously looking for. However, that can now happen as the SEC recently approved a rule change that now allows companies to have the ability to raise capital at a direct listing. Now keep in mind this is yet to be done by another company, so there's always a hesitation in doing something first without having an idea of how it will go in the real world. But hey, this is the Robinhood that went into the unknown of not charging commissions on trades, right? Now they also have the option to do what Roblox is doing, which is to go with a direct listing after holding another private round of fundraising. But at this point, there is no indication that Robinhood is looking to explore the direct listing, which, as I just mentioned, they've already selected Goldman Sachs to lead traditional IPO. Alright, forgive me for my rant. Now to the actual news. In an article on Bloomberg written by Matthew Monks and Scott DeVoe on January 7th, it was reported that Robinhood was considering selling some of its shares directly to its own users when it goes public this year. Now that's significant, and a way for the company to help save the disruptor reputation that I was just saying that they might be tarnishing by holding a traditional IPO. Now the article does say it would be allocating what they call a significant minority of the shares that will list to its own clients. But the authors also note that no final decision has been made on how much stock it might sell to its own customers, or if Robinhood will even proceed with the plan. If this were to happen, it would be huge, as a portion of their own account holders could actually get Robinhood stock at the IPO share price, which, as I've said many times, is difficult for retail investors to get a hand on. Obviously, if this does happen, the devil will be in the details, so we need to see what they put into their S1 filing to figure out how much of a game changer this could be. When that filing comes out, I'll definitely dig into it and put up another video on what information is in there that you'll want to know. The last juicy part of that article was that a Robinhood IPO could come as soon as this quarter, another piece of evidence that they are likely to go public this year of 2021. If that is the case, then we should start hearing reports of Robinhood filing confidentially soon, which as of yet, I'm not aware of that happening. But as soon as I do hear something, I'll definitely share it with you. If you don't want to miss it, remember to turn your notification bell on. So what do you think? Are you in on a Robinhood IPO no matter what? Or do you still need more information before making that leap? Let us know what you think in the comments. It'll be exciting to watch the journey of Robinhood investors being able to trade Robinhood stock on the Robinhood platform, and I'm looking forward to helping cover that journey with you. So yeah, there'll be more to come. But for now, if you enjoyed this video, please like it, comment on it, and even share it with your friends on any of your social media sites. That's your contribution to helping me grow the channel, and something that I would be extremely grateful for. And for those of you here for the first time, I hope I convinced you to join the community on the type of content I deliver. After all, it's totally free, you just gotta press that little red subscribe button. We'd love to have you on board. Until next time, thank you for watching, and have a great day.